Yeah. So yeah, as you guys may or may not know, there's a US bank holiday tomorrow. So um, I will be trading. I will be trading. It's always the case. I always trade bank holidays. I very rarely kind of sit out of the market. Like I'll always observe it, and it's more of just a case of like if your setup presents, I will execute. Right. I remember a trade like it was probably like 2 or 3 months ago, and there was a US bank holiday, and like so many people said like I'm not trading today. It's a bank holiday. There's low volume, low liquidity, and everything. Right. And yeah, I took a trade. Everything lined up. It was an A plus setup. All of the rules were met, and it flew to take profit. Right. And like so many people were like, oh, I wasn't trading and this and that. And it's like, well, if the rules line up, just take the trade, you know? Because often when we see manipulation, this is actually a sign of volume. Okay. So when people say like, oh, there's a lack of volume on a bank holiday, right? And often there may be, but you don't know until you actually see price action. For some reason, there might be like some macro events, and for some reason there is volume, right? But we don't know that, right? And so yeah, in terms of bank holidays and how I approach them, it's just like any other day. It's just like any other day, right? Cool. All right, let's crack on. Let's fly in. Let's have a look at today's game plans. Let's have a look at today's trade plans, what we're looking for. And yeah, I have a few things on the agenda. The first thing I want to run through is like, what are we looking at today? And then I want to run through some trade recaps and things that have sort of happened from the previous week. Right. So let's start it off. Start it off. So we've got gold here, US 500. Let's take a look at that first. So we're a little bit, I guess, closer to setting up here. So let's take a look. Right. Number one, bearing in mind this is US 500 on the 15-minute time frame. What do we have? Well, 50, 100, 200 EMA. What's the bias here, guys? What's the bias here? And you should be screaming at your monitor right now, very aggressively. Bullish market, right? Bullish market, right? Because the 50, greater than the 100, greater than the 200, momentum's to the upside. Momentum's to the upside, right? Looking to the left here, we've kind of had this gap overnight. This is what I call, this is like an N dog, right? NDOG. Or you can call this a WOG, which is a WOG, which means like a weekend opening gap. So a weekend opening gap or a new day opening gap, whatever you want to call it, it's the same thing pretty much. I mean, they're not the same thing, but they're similar. You know, whether you call this a new day opening gap or a weekly opening gap, it's pretty much the same thing, right? So we had that gap over the weekend, gap in price action. And so this is kind of what started off the momentum. So the intention started on as we opened, right? And this has sort of set the intention, at least for today and probably more likely for the next few days as well, right? Ever since we've had that gap to the upside, Asia sort of distributed in price. We had a pretty aggressive sort of rally to the upside after a nice form of correction here. So a sort of pullback, and then we distributed. Right? So London as well was fairly aggressive, like fairly like showing momentum. Okay, so what's the plan today? Very, very simple, right? So we have the London low right here. We can go ahead and mark this on. Of course, this is between 3 a.m. and 5 a.m. Eastern. Oh, I need to change this New York session. So this was from a back test that I was doing with one of my one-on-one students, so apologies for that. So the New York session, like the New York kill zone is like literally just starting right now. So this is 8 a.m. Eastern. That's why we're on this stream. That's why we're all looking at the markets, right? So what we have is London between 3 and 5. And so what we're going to be looking for during this New York kill zone is, can we come down? Can we manipulate below the London session low? And then can we see a sort of intention from buyers indicating that momentum is stepping into this market? If so, we may have a potential long trade on this market. Okay, So at the moment, US 500, we're in no man's land. We're in no man's land, right? So yes, we're bullish. Yes, we have a bias. Yes, we have, we understand what the market regime is today, but that's not a case of just, getting long in the market, right? So if the kind of logic is like if and only if we see a manipulation below the London session low, then we can think about potentially getting long in this market. Okay. So the beauty of the system, right? The alert goes at the London session low. And then if this goes off, we can monitor more closely. If it doesn't go off, then guess what? We've got a no trading day, right? We've got a no trading day if that is the case, right? The other option is, well, we have the Asia low right here. So the Asia low. And this is kind of like a panic station option. Like looking at the way that the market's set up today, if we take out the Asia low, which seems fairly unlikely based on where we are and based on where price action is, this would be like scenario number 2, where, we take out London and we take out Asia, and then we can think about getting long. Okay, so this is going to be like scenario number 2. So if and only if we take out the Asia low, then we may have another option. Okay, and of course, we're going to, along the way, we're going to be paying attention to the fractals after the manipulation and making sure that these are valid A+ trades. Okay, often what you find or what can happen, often is probably not the right word, but like let's say that we do get an option from London and, let's say we get long here with an invalidation below here, targeting like a 2R, and let's say we get stopped out. Well, we're going to have another option, and that's going to be below Asia because we have fresh liquidity resting below here. Okay, so New York, often we have 2 potential scenarios. One is going to be like your London manipulation, and 2, your kind of second option, which would be the Asia manipulation as well. Cool. All right, so that's the plan for today on US 500, right? There's a lot of news. There's a lot of movement for no news on a Monday. That's right. And that's also kind of like the logic for like when we're trading like bank holidays as well, is because like we just don't know when the volume is going to come into the market, right? So it's best to not kind of assume, and it's better to be more kind of like reactive and waiting to see if it does actually come into the market, right? You're right, Daryl, right? It's very far down. Do we get the Asia manipulation? Nobody knows, right? Nobody has a crystal ball right now, but at least we can react and see and act accordingly if we do see it, right? All right. So that's US 500 boxed off. ES boxed off, right? Let's take a look at gold. This is looking very aggressive, but also looking very good in terms of how it's sort of set up, right? So looking at gold, right? Very clear momentum. 50, 100, 200 EMA indicating long bias. Right? We got a distribution in Asia, right? We had a very aggressive movement to the upside, which is sort of what has kicked off all of this momentum. Okay, so we've kicked off all this momentum. So we've seen the distribution in Asia. What do we often see once we've seen distribution? Right? What do we often see? Accumulation, right? Right? So we have distribution, and this is the thing: if Asia distributes, often London will accumulate. Not always, but often. So this right here is your London accumulation. We pretty much went sideways. There's no real clear direction here, right? And this is a good sign. So we've had the Asia distribution, London is accumulated. So what do we know and what do we want to see? Well, because we're bullish, we need to see price come down below the London low, right? Something like this, below the London low. Then we can think about potentially getting long in this market. So at the moment, if you're thinking about entering, you're chasing price. you're chasing price completely, right? And you're opening yourself up to the risk that price could come down, take you out, manipulate traders, thinking that this is a breakout to the downside, inducing a lot of traders short into this market, and also stopping out any early buyers, whether that's early buyers from New York or early buyers from London. They're going to be getting stopped out, right? So yes, momentum to the upside. Yes, this can continue, but you're opening yourself up to a lot of risk if you don't wait for this form of manipulation, right? Cool. So below here, what do we have? Well, we have a lot of sell stops, a lot of liquidity, a lot of traders that are going to be induced in this market short, right? Which, as we know, this is what provides the liquidity and fuel for the bigger players to actually position and get long in this market, right? Because they can't just long here, right? As we know, then if you need to buy at market, there needs to be a lot of sellers on the other side of that trade, to actually provide the liquidity. Okay, cool. Do we take out the Asia low here? I don't know. I don't think so. I do not think so, right? Like, this is very, very far. Like with US 500, at least there was like maybe some likelihood, maybe like a 5 or 10% chance. But with gold right here, there might be like a 1% chance. Maybe like a 0.5% chance. I don't think we're going to get below Asia as like a potential option. So I really think for gold in New York today, we only really have one option. And that's this right here. Cool. I think I would have put a bit too much salt in that. A bit too much pink Himalayan salt. Okay. Cool. Let's do some trade recaps, guys. So last week was pretty good. If we just look through the trades analysis channel right here, the first trade to run over is on the 7th of November. So let's start with that one. So if I just pull this up right here, and this was of course on US 500. Okay. All right. Let's take a look. So if I just play this back to like the start of the session, right here, and we zoom in right here. Okay, cool. And we remove all of this and this and this. Okay. So US 500, 15-minute time frame. This was a London setup. So this was literally Friday, 7th of November, last Friday. I know so many people took this trade. Don't worry if you didn't, right? There's always going to be another one around the corner. Let's break it down, right? What did we have? Well, 50, 100, 200 EMA, sell bias, right? What did we have? We had the Asia session high right here. So we can go ahead and mark this on. We were very close to like manipulating Asia before the session. So if you look right here, if I just zoom in for clarity, see this bearish candle like just before the open? This is going to induce a lot of traders short. Even this just sort of price action, right? So already a lot of traders are going to be getting on like the wrong side of the market because they're going to be getting short, anticipating lower, which they should be, right? Because momentum's to the downside. But they don't really understand context. They don't really understand the kind of bigger picture, right? What ends up happening is these traders that got positioned short here, right? They're going to be getting stopped out. And this was really on the open at 3 a.m. Eastern. So we have the London Open, the first 15 minutes of the open. What do we see? We see clear manipulation above the Asia session high. What is this going to be doing, right? This is going to be inducing traders long into the market. So inducing traders long, right? And this is also going to be stopping early sellers. Okay. So as we know, when traders get, induced long, this is what provides the fuel. And as we know, stopping out early sellers, right? If you're short and you get stopped out, well, you've got to buy at current market price. You have to buy right here. So there's going to be a lot of buy orders that are flowing into this market. They're going to be getting thrown into this market, right? And so this is what provides the fuel. So we have the open. So we have the high and the low of the first 15-minute candle of the open, right? What do we see? Well, we close below that and we get a strong 15-minute bearish confirm. Okay. You know, whether you want to look on like a more granular level, yes, we kind of broke and closed below this structure right here. In terms of like market structure, you've got a high, a higher low, higher high, market structure shift. Do we look at this on like a granular level? No, we don't, right? But it's just to illustrate the point that this is a very strong confirm, right? And I remember like this setting up in real time, right? You know, I know a lot of you guys were in this trade and I was seeing this sort of setting up here and I was like, stop. Like the confirm was just getting like larger and larger and larger. And like it was about here or here. And I was like, chill out. I want this confirm to be a lot smaller so we can get, you know, a tighter stop loss, right? Anyway, it ended up being a pretty significant candle. Does that matter to us? Not at all. You know, because we trade a mechanical rules-based system, we don't care really about the size of the confirmation. And that's certainly how we back-tested the system as well, right? So, of course, our entries on the break of this low. So not on the closure, on the break of this low, via a sell stop in the market, right? So entries on the break of this low. Whether you want to watch it visually, you know, if you have chart time and you can watch it like just break the low, get involved on the break. Or if you want to set a sell stop, you know, if you're working full time or, you know, you're going about your day or whatever, either's fine. Either's fine. Invalidation, not in no man's land, right? Not in no man's land, above the manipulation high, as always, right? We were tagged in, I think, on just the next candle. Yeah, it was just the next candle. So let me just check the Discord. Oh yeah, so this was sent right here. So this was sent here, right here. So this was tagged in at 8:31. This is UK time, which is like 3:30 a.m. Eastern, right? The exact entry. And then it was just a case of allowing this trade to play out, right? Set and forget this trade. Don't look at it. Don't micromanage. The hard part of trading, right? I can't remember exactly how this played out. Oh yeah, we got this like pretty nasty drawdown here. So my question is, how were you feeling during this drawdown? Did you look at the trade? Did you micromanage? I hope not. Did you look at it? Were you emotional? You know, because we've got an excursion of around like 50% towards the stop loss right here. So, you know, how were you feeling? This is where you kind of like need to be honest with yourself, right? Did it like trigger you? Did it make you feel emotional? Did you close it? Right? That retrace was basically like an ICT model. You're right. What it's kind of doing, which, as you know, like we don't really pay attention too much to this, but in here we kind of have something called like a fair value gap, right? Between this low and this high here. And what we're kind of doing is we're coming back and we're mitigating these orders. Okay. So we're coming back. There's an imbalance of price action right here between this wick and this wick here. We're coming back and sort of balancing out price action, right? Which is often the case, not always the case, which is why I don't use this entry model, because there's also a lot of trades where you're going to be tagged short and this is just going to go without you. You know? So you're right. This is like an entry model from some of like maybe the older ICT concepts. But it's why I don't use it, because you're going to be on the fence a lot of the time. Like if you're waiting for pullbacks, as we know, we don't often get them. Not when there's a lot of momentum in the market as well, right? Cool. So we survived this. It started looking a bit better here when we were like closing and breaking below here. I was pretty happy at this point. After kind of this internal structure shift right here, this retrace, and now we sort of make that like second lower low after breaking. Looks pretty good. Looks pretty good. And then we kind of fell out the sky right here. This was like a beautiful kind of liquidation right here below these lows, taking out the Asia low. And this smash take profit for a 1 to 2, right? As we all know, right? But beautiful trade. Beautiful trade. Did it fly to take profit? Not really. So this is a good example of, you had to endure this drawdown. We got a push, we got a small pullback here, another push, another kind of pullback, and then we drop. So a good example of patience right here. A good example of the discipline that was required, right? So, yeah. Who took this, by the way? I'm interested. Who took this? Of course. Yeah, of course you guys did, right? Of course you did. You're right. ICT has a new concept every week, every day, right? Every day. It's why, some of this stuff works. Like I'm not sitting and bashing ICT. The premise and a lot of these concepts, they work, but you're right. Often it's chopping and changing. There's new concepts all the time. The new hottest object, the new trendy thing, right? And that's a problem. 2%, Will, nice. Jeffrey, nice. Oh, you secured your first payout, Rory? Happy days. Happy days. I know this setup pretty much happened on like most indices as well. So I know like some people took it on like NAS, some people on the German DAX. So yeah, it was clean. Super clean. All right, let's take a look at the other trades, right? So if I keep scrolling here, oh yeah, the trade before this was the 5th of November, again on this was on a Monday. So I don't know if you guys have been paying close attention. I'm assuming you have, but on Mondays, our strike rate has been like around 80%. This is like over the last, say, like 4 or 5 weeks, right? So Mondays have been on fire. And there's often that common question where people are like, oh, I don't want to trade Mondays. There's like a low volume and all of this nonsense, right? Show them the win rate. Show them the data, right? Okay, cool. So the next trade I want to look at, we only took 2 trades last week. 2 trades, 2 winners, I believe. Correct me if I'm wrong. I just want to double check that. Yeah, that's right. So as we know, like we average like around 3 A+ trades a week. Last week was only 2 trades. 2 trades, 2 winners. That's enough, right? If I could make 4R a week, 4R per week with only 2 trades per week, that's all right. That's a living right there, for sure. So let's break it down. So this was Wednesday, 5th of November, and this was like a New York setup, right? So what we had was the 50 EMA, 100, 200, sell bias. Sell bias, right? We didn't have anything in London. And what we had, which was a very common thing, which is Asia distributes, right? As we know, if Asia distributes, well, London often accumulates. And if London accumulates, well, the expectation is New York will distribute, New York will manipulate, right? If London accumulates, New York will often manipulate and then distribute in price, right? So before we even look at kind of like the nitty gritty kind of, entry schematics, this is already checking out as like a clean A+ trade, right? So cool. So we entered into like the New York kill zone. We got this first initial bearish confirm. So already a lot of traders, there's not been any manipulation. They're going to see this first bearish confirm and they're going to be like getting short, stop losses here, here, and here, or whatever. They're going to be getting stopped out. So people are already getting wrecked here, and you can see that. Right? So we started pushing above the London high. So London high right here. And the kind of trade plan is like, do we take out both sessions? Like, do we just take out London and then go? Or do we take out London and Asia, which is kind of what's happened here, and then we distribute in price, right? So that we don't need to take out both. So this is like a very common question that I always get is like, you know, do we have to have like an extreme manipulation where we take out London and Asia? Like we take out both, and that's not the case. That's not the case, right? So even if we like just kind of peaked our head above London and then confirmed, that would have been okay. That would have been okay, right? So we don't have to take both sessions out, right? So there's fresh liquidity above London, which is unmitigated. Fresh above Asia, again, unmitigated. We've not had any price action above here. What do we get? Well, we see the manipulation right here. So we're sell bias. We see a rate of buy side liquidity. This confirm was tiny. I was looking at this like that is a tiny confirm, but it's valid. But it's valid, right? Also, what did we do? Well, we closed back inside the range. So we have the Asia high, we manipulate above, and we close back in the range, right? So what we can kind of classify this as right here is, okay, this is your manipulation, this is your deviation, and this is your reclaim of this level, okay? So this is a deviation and reclaim. So it's classified as a reclaim when we close back inside the range. Right, it's a deviation when we're sort of like above the range, the range high, but it's a reclaim once we get sort of back inside the range, and then the kind of expectation is, well, okay, this should be sort of like the high of the day or the high of the session, and then we're back inside, we've reclaimed, and so this should now just continue lower. We should now distribute, right? And so, as we know, if I just pop back over to the Discord, I just want to check the exact entry. Which is right here. So just checking. Yes, so I definitely notified you guys to take a look at the US 500 for potential shorting opportunities, right? So entry was on the break of this low. For me, this was like, I took this in the live stream. So I didn't actually set a sell stop. I was just like, I just market executed this. Okay. So as always, we need to account for some spread above the high. My entry was just on this break right here. And we were going for a 1 to 2. So I was tagged short right here, as I know a lot of you guys were as well. Clear invalidation, clear target, no interfering, no micromanaging. Allow it to play out, right? This trade looked shaky though. So this, on the entry, it doesn't look it right here because you know we're only playing with like closed candles, right? Unlike the bar replay. Well, at one point, this second candle here, this had like a huge bottom wick and it was like flipping bullish. I don't know if any of you guys recall this, but it was like flipping bullish and it was not looking good at this point. You know, so again, how all trades have a talking point. All trades have like an area or sort of point of interest to talk about. You can't visually see it here, but it was flipping bullish and it was, you know, showing sort of bullish intentions. Okay. The other thing is, well, do we have any sort of fractals at the time of confirmation? So if I take this back right here and we're looking at the fractals, you're going to go, okay, well, we have at the time of confirm, we did not have any fractals after manipulating, right? So we have the London high, Asia high. We confirm at the time of confirm, we have no fractals right here. This is okay. This is a valid A plus trade. And as we know, we would take this every single day, right? Cool. What a banger trade, guys. What an absolutely beautiful trade. You know, my expectation was, well, we have pretty clean traffic below this wick. So we're only kind of expecting like, you know, this kind of wick fill. You know, whether your take profit was slightly below. I think mine was like a tiny bit below here. And a 1 to 2. And so my expectation is, well, this is a kind of like a swing low because we've got this huge rejection. We should see that and maybe we reverse from here, right? Because there's going to be a lot of liquidity below this wick right here. So maybe we take that out and maybe we reverse, right? We started melting to the downside. Price went to like around a 1 to 3.5. What did we take out? This is a very common pattern that we're seeing over and over again, which is after the open, right? After the NYSE open, right? Price often comes down and mitigates and manipulates below or above the pre-open high or low. Okay, so this is the pre-open low right here. So if I mark this on. Right here, this is the pre-New York, the pre-NYSE open low. What do we see? Price comes down, manipulates that low, takes it out, off to the races. But at that point, we've already taken profit. And again, this is why it's so important to bank your profits. Don't go for the home runs. Take your money out of the market. Don't look at the market, and that is you done for the day, right? So at this point, we were done even before the open. Or maybe just on the open, right? Which is a very common theme that we've seen recently, which is we get volume on the open, right? And it's like if you were positioned after the open, you just missed this trade. Like if you wait for the open, which I know some people do, right? Your entry is going to be down here or maybe here. Well, you're late. You're late to the party, right? And yeah, I've seen a few people, certainly in the free community, with late entries and entries that didn't really make much sense, right? But not you guys, right? That's why you're here, right? And so yeah, take profit was hit, and within sort of 15 minutes, if you don't take profit, you've just lost it. You're either break even or you've just took a loss. So again, another amazing example of how important it is to secure your profits, bank your profits. Take that small, repeatable, bite-sized piece out of the market, come back the following day, the following session, and rinse and repeat. Rinse and repeat, right? You're right, that's a Judas swing at the open. That's exactly what it is. All right, Will, catch you later. No worries, mate. But yeah, again, how important it is your entry's on the break of this low, but if you miss this, you don't then FOMO into the trade. The optimal entry was on the break of the low. So let's say you're late to the party, and price has already gone without you. That's it. You're not then gonna try force a trade down here and hope that we then just get another 1 to 2 from here with a stop above here. That's poor trading. Right, that's essentially FOMO. You've got a fear of missing out. You're I know that I should be in this trade, but I'm just gonna get in. Very poor trading, right? Cool. So yeah, that was us last week, right? 2 trades, 2 winners, carrying on the sort of winning streak, the kind of the kind of pattern that's been going on. We've been performing very, very well recently. Very, very well, right? So, amazing trade. Amazing trade. Let's take a look at the markets today. Let's take a look at real time, what's sort of going on. Hopefully we haven't missed too many trades. All right. So we're sort of chilling. Gold looks like it's maybe starting its journey, starting its correction. Maybe this is the start of our correction, right? And maybe we see this manipulation, but who knows, right? Who knows at this stage? Cool. Do you guys have any questions regarding either today's setups or the setups that we took last week? Or are we good? Why did price action reverse so drastically? That's a good point. That's a good point. If I just take this back to what was this? Oh right, yeah, US 500 over here. Yeah, so we had some high impact news at so New York time, 10 a.m. 10 a.m. So, I mean, this kind of was sort of prior to the news. So I don't know if I don't know, maybe like an inefficiency, or they're trying to price something in like very last minute, or whatever the case, which, you know, there's probably infinite amounts of ways to describe why this may have happened. Probably Trump farted. That's probably the most highest probability reason. But I actually have no idea, to be honest with you. Like, I can give you like a few explanations, but they're going to be wrong. They're going to be wrong, which is why I don't like to sort of waste too much mental energy on these sort of things, right? But I know we did have some like high impact news at 10 a.m. Eastern on 5th of November. Yeah. Yeah, Trump farted or Biden fell asleep. I don't know. It's either one of the two. Oh, this was a great one. This was a great one. So this was Thursday, 6th of November. So I also have this on the agenda as well, right? And this was sort of like, we used this to filter this losing trade. So we didn't take this trade. We followed the rules to filter this out, right? There was a few reasons why this was invalid. The main one being we swept sell side liquidity. So we swept the London low. We formed this fractal low, and we re-swept the liquidity, right? So as we know, according to the official blueprint and the official momentum mastery system, if you see a manipulation, right, and we form a fractal low, well, we should not re-manipulate this low. That's really what we call an SOW, which is just like a sign of weakness. Whatever you want to call it. Sign of weakness, there's many different descriptions, but that's what this is showing. And for a few reasons. The main one being, you know, if this is the low that we've manipulated, actually, let me go up here. Like if this is so, you know, take a market, we're long bias. Let's say this is your London low right here. And so we need to see a manipulation below there. We see that, right? If we see what we have just seen right there, which is buyers are showing intention, right? And then we make another lower low after manipulating, this is an SOW. This is a sign of weakness right here, right? Because what this is basically telling you is we have seen manipulation, right? This is the London low. Let me just mark that on. Right here, the London low. We've seen the manipulation right here, below the London low. So buyers should show intention here. They should continue this market to the upside, okay? Because there's a lot of liquidity resting below the London low. This is going to be stopping traders out. This is what, as we know, provides the fuel. And this is basically telling you that it's not providing the fuel, right? It's not providing the fuel because buyers tried to step in, sellers took control, right? Hence the lower low after manipulating, right? Remember, this is all after manipulating. When we're looking at invalidating trades or filtering A+ setups, it's all about what's happening after the manipulation, right? We don't care about any price action before or prior or yesterday, right? It's all about sort of what is happening in real time. That's what is going to give you like the most up-to-date information, right? And it's really like being reactive from this price action, rather than like trying to predict what's going to happen and using a crystal ball, like just seeing what's happening and judging price action in real time. That's where a lot of the edge comes from, right? So yeah, we got that lower low, the sign of weakness, and so it's off the cards. It's off the cards, right? So if we go back over to the market, that's exactly what we got right here. We had the initial manipulation right here. We had that continuation. We then made a lower low right here. And so, sign of weakness. It's now more likely that price is going to continue to the downside, right? So I know a lot of people, certainly in the free community, they would have got long on this break of this high thinking that, oh, like this is a valid A+ trade or whatever. Or maybe people that are not super in tune with the market, you know, on the break of this high, something like this. Invalidation below the manipulation, as we always do, and you'd have been stopped out, right? So it's amazing to look back and not just like the winning trades that we had last week, but we can also look back and be like, oh, we avoided a loss here. You know, so it's beautiful to see winning trades. It's amazing. But if you look back as well and you're like, I avoided 3 losing trades last week. I filtered, the A plus trades, like the highest probability trades. That is what is more important to me. And this also helps with like building conviction, confidence, and like belief in the system. Because you're like, oh, I avoided this trade and I avoided a loss. So I'm going to do that again next time. That felt pretty good, right? Cool. All right. So yeah, it's important to talk about winners, losers, but also just like trades that we avoided as well. Right? So super interesting. Okay. So US 500, 15-minute time frame. We're pretty much chilling. Let me just check the economic calendar today, or really for like the upcoming week. So not just for today, but like what can we expect for like the upcoming week, right? Something that's sort of actionable. So if I just pop over here, FTMO economic calendar, what do we have? All right, so if we look at like restricted events, so nothing of course today, which we know, but let's look at like the week. Right? So nothing today, nothing tomorrow in terms of like restricted events, so ones that we're going to be like paying like super close attention to. The only one that sort of pays it that is worth paying attention to, which is on my birthday, by the way, which is Thursday, November the 13th, right? Shout out my birthday, is CPI. Right? So we have core CPI. This is Thursday, November the 13th, 1:30 UK time. That's 8:30 a.m. Eastern. As we know, this is a restricted USD news event. It affects indices. It affects any sort of pair that's crossed with a dollar. Do we know what the release is going to be in terms of like, is it going to be bullish or bearish? We have no idea. Do we care? Not at all. But the game plan, right? If we just check the game plan, right, for Thursday is going to be as follows. So it's important to plan ahead of time. It's important to understand and be mindful of, what's happening in the week, right? So we know we have CPI 13th of November. So what's the plan going to be? Well, if we have no trades, we're going to wait for the release. Okay? So we're going to wait for the release of CPI. Once it comes out, we're going to wait 15 minutes. So really that's like 8:45 a.m. Eastern. Okay. And then if the rules line up, then maybe we have a trade. Or I will be taking a trade if the rules line up, right? So in terms of how to navigate Thursday, this is the plan, right? If we're positioned prior to the session, so like say we have a position in London or even from like a previous day, I'm going to close it out before CPI. So I'm going to close it out, like normally I do it like 15 minutes before. And then what I'm going to do is I'm going to wait for CPI to come out, 8:30 a.m. Eastern. I'm then going to wait 15 minutes until 8:45. If the rules in the system lines up, we have a trade. That's how we're going to trade CPI on Thursday, right? Cool. So US 500 is sort of chilling. We're sort of chilling, we're sort of consolidating, we're sort of ranging here. So my guess now is that we're going to have the open 9:30 a.m. Eastern. We're going to have the open, we're going to see volume come in. And if the plan works out, we're going to see volume lower, manipulate below London, and then we go. Right? So, for example, like let's say we did have CPI today. Like let's say we actually did have CPI at 8:30 a.m. Eastern, which was around sort of 20 minutes ago. Right? Then the expectation of that sort of day would be like, okay, we have CPI. The expectation is we're going to see this manipulation below London off the back of CPI before the open, and then we can think about taking a trade. right? So often it's important to like look at the events and like what we have coming up, and sort of contextualizing where we are in terms of the session. Whether we're around the open, whether we're at the start of the session and we have like some red folder news that could create manipulation, understanding like what is sort of going on in the macro, right? Super important. Super duper important. But right now we're chilling. We're drinking Himalayan salt water, and we're doing nothing. Yeah, it's true. I'm not here to like hate on any other traders or like any other like ways of trading. Um, but I do think like ICT and a lot of its concepts certainly overcomplicate things. I do agree with that. It may work. I seem to have like the overwhelming majority of that it doesn't, and it's maybe too complex, or um, it's not mechanical. And often when things are not mechanical and they keep changing, which is they keep updating the new shiny object, often the case, right? With the trading industry, well, often that does not work. So I'm not here to sit and bash other people, but yeah, just from my 8 years of experience, things that are not defined or not mechanical or not rules based, well, often it might work for a while, but you don't even know if you have an edge at that point. You don't even know if you have an edge, because how do you? Because you don't know the parameters. You don't know the rules, essentially, because they're always changing and they're never going to look the same, right? So that's the problem that I have with sort of discretionary systems. And like, yes, some of the concepts are defined in ICT. Some of them are, right? Like, I can tell you that this is a fair value gap right here. Okay. But which fair value gap do you use? Which order block do you use? Which time frame do you use? Do you use order blocks? Do you use inverse fair value gaps? Like there's like a million. Enough, right? Enough is enough. So yeah, stay away. I stay away. But I'm going to be biased, right? I'm going to be biased. Of course I am. Yeah. We're starting to manipulate. Well, not manipulate, but we're starting to correct. Right, we can only classify this as a manipulation below here, right? Anything above here is a no trading zone, right? So like, that's quite a good way to look at it, actually. Like London low and above is a no trading zone. Below the London low, trading zone, right? So if somebody's kind of maybe getting emotional or like they want to get involved, maybe this is a good way to look at it. Like you can mark up your charts and be like literally telling yourself trading zone, right? Below here, I'm interested. I'm interested in longs right below here. If it's not below here, I'm not interested. Food for thought. You agree with everything that I just said? You're probably the first person to ever say that. Yeah, that's right. We're like a sniper, right? You're sat there. Picture this, right? You're sat there. You have a ghillie suit on. You have your camouflage on. You have your sniper rifle. You're pitched up, right? You're in like a high-rise building, like a 400-story building. And you have your night vision goggles on. You have your laser. No, you wouldn't have a laser sight because that would give away attention. You wouldn't have a laser sight, right? You're trying to be disguised here. But yeah, you're camouflaged. You have a suppressor. That's what you have. You have a suppressor, right? You're waiting. Nothing's moving right now. We have no targets. We have nothing. Right? We're posted up. Right? And then when we get below here, this is really like a sign of movement. So like we get below here and we see a rustle. We see something like rustling in the bushes, right? But we don't know yet. We don't know what it is, right? It could be a civilian, right? But then when you get the confirm, this is when we know, like, we have the target. We have the target right here. This is the guy. Like, you know, we've been waiting for like however long. 4 days. We haven't slept. We haven't ate. You know, we haven't pulled the trigger yet. But now is the time, right? Trading is a lot like sniping. Whether you play video games, maybe you've been in the army. I don't know, right? But it's a good way to look at it. It's a good analogy, right? I remember this, I think it was Modern Warfare 2. Like, we're talking like at least 10 years ago. And there was this mission where you're like crawling under tanks with your ghillie suit on and your sniper. That's us, right? We're undetectable until the time is right to strike. And then you strike without hesitation. And you take out the target. And sometimes you're going to miss. Sometimes you're going to have a losing trade, right? That's missing the target, right? Half the time you're going to miss. You know, 50% you're going to miss the target. Right? The target's going to, you know, they're going to find you. Maybe they're going to run away. Maybe you just missed. Maybe it's just a losing trade. All right? But you're still gonna have the camouflage on. You're still gonna come back the following day. You're gonna put the ghillie suit on. You're gonna put your backpack on. You're gonna load your gun, your sniper, right? And you're gonna repeat it. Okay? But the problem that most people have is they don't last long enough, right? In most areas of life, right? But my point is they don't last long enough in the trading industry. I need to be more specific, right? They don't last long enough in the trading industry. So what do, right? They don't stay posted up as a sniper. They go into another career. Maybe they go on the front line as someone with an assault rifle. That's probably someone that's like scalping on the 1 minute time frame, or like a machine gun, right? So, you know, we're sort of sitting back in a high-rise building, in the bushes, camouflage, right? That's us. That's us. So thanks for that, Daryl. I know I've went off on a bit of a tangent, but appreciate it. Story time, huh? Story time. Hi, Liam. I'm going to open an account with Alpha Capital. So which account should I open? Like Swing Alpha Pro, Alpha Pro 10, as you were trading Alpha, so I just want to confirm. I'll message you off the back of this. But Alpha have kind of changed their ways a little bit, which is why I'm primarily focusing on FTMO. Like, I do still use Alpha. I trade with them. But I'm more focused on FTMO, certainly at the moment. But I'll drop you a message just off the back of this call. There's some other members as well that use Alpha, so they will have good insights as well. So we can have a discussion after this, for sure. Being there in the military, I respect that, Daryl. Respect, man. For sure. But that was a great analogy. Story time, huh? Hopefully you guys have not fell asleep with the story time. But yeah, what else are we going to do, right? We're just sitting here on our hands. What else are we going to do? We're going to have to tell some stories, right? Super choppy. Super choppy, you know, just before the open, which is often the case. Right? My thoughts really is like if we look at US 500, yes, we distributed here. We also kind of distributed in London, right? So maybe this is like the accumulation because we've not really had a chance to accumulate. And then maybe we get the kind of aggressive manipulation around the open or after, right? So, yes, we have these kind of guidelines and these frameworks where, like, if Asia distributes, London in general will accumulate. Not always, right? Here's an example. So it looks like they're kind of like biding time here. They're kind of, sort of accumulating orders or sort of just like setting it up. They've got to kind of like set it up. It's like laying it up, right? Like if you're playing basketball, you can't just dunk, right? Or maybe some people can if you're gifted. But, so often you need like a teammate to set it up. You need a teammate to give you a layup and you're going to come in for the dunk then. It's a lot easier, right? So yeah, that looks like what's kind of happening here. We're sort of accumulating because we didn't really get a chance before, right, in London or Asia. And so maybe we get an opportunity below the trading zone, right? Below the trading zone. Cool. Sounds like it will. Certainly looks like it, right? It's like that saying, right? It's like, if it looks like a rat and it moves like a rat, it's probably a rat. That's what it looks like to me. For sure. Do you guys have any other like questions here? Keep me busy, guys. Keep me busy. Give it cheese, right? That's the manipulation. The manipulation is the cheese, right? You're dangling the carrot. You're dangling the cheese. For sure. You got me now, Daryl. You've got me cooking here. The manipulation is the cheese for the rat. We've seen the rat. We need to see the manipulation, right? That's the carrot. That's the cheese, right? So you want to hope that you've got some pretty good cheese, some pretty smelly cheese, right? And as we know, this is the trap. This is the trap right here, right? Which is gonna, this is the rat trap right here. This is the rat trap, right? And this is going to make the rat think that this is going to go short. Right? The uninformed rat, right? The rat doesn't know what's going on, right? It's just reacting to stimulus. It's just reacting to to life, right? It can't consciously think, right? And so we're going to give it some cheese, right? That's what we're going to do for sure. Here's a great question, Rory. And yeah, thanks for being here, Rory. Appreciate it. So how am I taking payouts? You're thinking like 3 to 4R as you use 0.5 risk. I'm in the same pretty much ballpark. So in general, what I do is I like to take like smaller kind of like repeatable payouts. So I'm more in the kind of like 2R camp. So if you're using like say you're using 1% risk, I'm going to take payouts at like sort of around like 2%. This is not like concrete, but it's in general what I do. In general. So what I'll do is like when an account or multiple accounts are up like 2R, I'm just going to let it get paid out. And I'm going to rotate and I'm going to go to other accounts and I'm going to trade other capital, whether that's personal, prop firm, whatever. And you're going to go again. Because a huge problem that so many traders have is, they'll have like a winning streak like what we had the other week, which was like a 10R winning streak, and even last week we did 4R, right? So, let's say you're up just like 10R for simplicity and you're thinking that you're doing amazing because you are. But most traders, they don't secure the profits. They don't see it. They don't pay it out. They don't let it get paid out. Some traders even they would So they would take this money and they would then add this payout to their existing balance to give themselves sort of like a buffer, right? It doesn't work, it does not work. What you need to do is, take the payout, get it in your bank, see the money for yourself, smell the money, literally take it out, smell it, put it on your desk, right? Put it on your desk, look at it, acknowledge it, and understand, like, how did I actually make this money? What did I do? The money is a result of me following the plan. Okay, cool. Well, that's going to reinforce my habits because I'm going to follow the plan in the future. So for me, I'm certainly in this camp of 2%, get it paid out. Like a 200K account, that's like 4K. After the profit split, it's probably closer to like 3.2K. Get it paid out. Look at it. Smell it. Internalize it. Really come to grips of like what you're doing and the results and the fruits of your labor, like how you actually achieved it, right? For me, that worked because before you do it, right, it's just a number on a screen. Before you take it out and before you withdraw it from the I'm not talking about like withdrawing it to your actual like bank, like as in out of the bank, like in your hand. I mean, withdrawing it from the prop firm to the bank. Like before you do that, it's not your money. It's a number on a screen. It's a number on a screen. And, it pains me, and you can tell I'm getting quite, this is like a touchy subject, right? Because the amount of times I've seen people come to me and they're like, I was plus 15 or we're talking like 10 to 15K, right? And they didn't take the payout. And more often than not, it bites them in the ass, right? Not always, right? But often. And they get complacent. They think they're the best trader in the world. And guess what? They give it back. They give it back. But guess what? If it's in your bank, what could you give back? Well, worst case is you give a funded account back. Not the end of the world, right? If you have like a 4K payout and the account is like $500, well, you give $500 back. That's if you like self-destruct and like implode, right? So that's like the worst case. The best case is you take it out. You have it. And you're not giving it back, right? This also rings even more true with prop firms that are not as credible. So do you know how long this prop firm is going to be around? Do you know how long this prop firm is going to be operating for? Right? So imagine like somebody like thinking that they're going to take like 100K in capital and like scale it up to like 200K over like a year or maybe like 150 and take no payouts and the prop firm folds on you. The prop firm folds, right? What do you do then? What do you do, right? So take it out. Take it out. And even with the most credible firms, like they might not be around here forever. I hope they are. And FTMO, they've been around for like 10 years. So do they disappear overnight? I don't think so. But we still don't know. I wouldn't bet, 30 to 50,000 pounds on it or dollars, right? So I just take it out. So yeah, sorry for the kind of like long-winded answer, Rory, but it's sensible. And the fact that you've already kind of came to me with that idea and that kind of ideology, you're in the right camp for sure. You're definitely barking up the right tree. So happy days. Happy days. And then what you can do is you take the money out and you can then recycle it and you can put it into like another challenge, or you can pay yourself, or whatever you want to do. Right. But the ideology of like scaling up one account to like making it large or like huge, not my plan. I have a few. I have a few, Riku. I'm sort of sitting around 1 mil in funded capital. Yeah. I have another few which are like fairly close, like in verification stage. So hopefully we can like keep pushing on. But yeah, that's sort of the situation. I've just sort of like slowly built it up over like the last year or so. Right. And I think that's the sensible way. You know, this is not something that's going to happen overnight, right? Take your time. Take your time. Cool. I'm going to get off here, guys. Thank you so much for your time. Thank you for your support. Thank you for turning up on a dull Monday. I mean, in the UK, it's a dull Monday, right? Let's stay disciplined. Let's stay disciplined, right? So, you know, we're going to set the tone for the week. We're going to be here and we're going to follow the plan for the rest of the week, right? We're not going to give back even profits from last week. You know, plus 4R last week. We're not just going to go diving in, right? We're going to keep trading the plan. All right. So, yeah, as always, you know, if I have any trades, plans, executions, anything, I will update you in the trades analysis channel. So make sure you got your notifications on. All right.